Oh, in Fairclough here. He's more of a tweeter, in fact, than a Facebook type, but he's enthralled by the latest chapter in Mark Zuckerberg's story. Nonetheless, we'll get into that in a moment, but you've got the market numbers first, haven't you?
Yeah, European markets, a bit mixed, a little bit choppy, Stuart. Lots of earnings out today. We'll get into those numbers as well in just a moment. FTSE flat at the opening bell, but the DAX in Frankfurt up around 0.8%. The CAC a little bit quieter, around 1/3% up. The Asian markets, lots of Chinese tech companies basking in the glow of Facebook's application for flotation, wondering what sort of investment opportunities lie in store for them in the months and years to come. The likes of Tencent and so on had a very good day's trade, and that helped the Hang Seng closing up nearly 2%. You can see there the Nikkei a little bit quieter, around 0.8% up. Just mention as well Xstrata, the minerals giant, its share price up 13% after confirming it's in talks with Glencore for a possible all-out merger.
As you say, lots of earnings out as well. It's Sony, though, that's really caught your eye, isn't it?
Yeah, this is a company in real trouble now, Stuart. That's because by March next year, it will have reported 4 straight periods of losses, and the last quarter over Christmas was no exception. Third quarter net loss of 159 billion yen. This is a day after the company announced it's replacing Howard Stringer, its CEO. So a new man at the top of Sony. Yeah, the usual problems that we know about there, the fallout of Japan's disaster last year. But remember as well, Sony was at the mercy of online hackers last year, did its reputation no good whatsoever for its PlayStation network. Just a few other earnings out as well while we're talking about earnings. Novo Nordisk, the world's largest insulin maker in Denmark, a decent earnings season as well. Profits up around 19%. Shell's earnings marginally down, just 3% off. There's the earnings board for you.
And Deutsche Bank also still suffering from the Eurozone crisis.
Yeah, its profits as well also down around 70% for the last quarter. Difficult for this company, of course. It's trying to deleverage very quickly from the whole Eurozone crisis, but still feeling the knock-on effect from its investments in countries like Greece.
Now, about 3 hours ago, we set Owen off reading the 200-page document, Mark Zuckerberg's document about Facebook and why it should be floated, etc., etc., etc. You've been enthused by it, haven't you? It's a bit of a moment in internet history.
Absolutely right. I got through about the first 20 pages of it. Most of that was written by Zuckerberg himself. Absolutely fascinating insight into what's going on in this guy's head, but also a great insight into the company as well. Is Facebook overhyped? Well, almost certainly is. Is it overpriced? Possibly. We'll know, of course, in a few months' time when it starts trading. What is absolutely beyond doubt is this adds a whole new layer of intrigue to one of Silicon Valley's most enigmatic companies. Yuka Roya has the details.
In his letter to potential investors, Facebook's CEO Mark Zuckerberg said the company was pursuing a social mission, making the world more open and connected. For investors, Facebook is all about money, big money. It's expected to be worth up to $100 billion when it goes public in a few months' time. Some warn of the risk of overexcitement.
The company, quite frankly, is priced in a very rich way, which means in a year from now or 6 months from now, there's potential downside on the price if you come in the IPO.
There's no doubt Facebook is one of the fastest growing tech companies in the world. Last year, it generated more than $3.7 billion in revenue and made a $1 billion net profit, up 65% from the previous year. The internet site is every advertiser's dream. With more than 800 million users in a network of 100 billion connections, it allows companies to post customized, targeted ads in a very effective manner. Analysts say going public is also a way for its founder and CEO to keep running the company the way he wants. The IPO comes after he turned down repeated buyout offers from internet giants like Yahoo and Microsoft.
It's always been extremely important to Mark Zuckerberg to remain independent. And I think the IPO in that sense is an assistant to his goal in that, you know, he will have this valuation. It will be much harder for someone to acquire him once he's proven by the stock market to be worth $100 billion.
After the IPO, Zuckerberg will own 28% of Facebook's shares and have nearly 60% of the voting power.
So what is it about this paperwork you love then? It's the candid admissions. Is it giving the investors a bit of food for thought?
Well, absolutely. Of course, you're wading through all this stuff. You really get a sense of what this company's about. And you have to remember, this is the first time that Facebook has really broken cover and actually given investors some numbers, given investors the kind of details upon which they can make a judgment on whether it's worth investing. Now, as you say, we've had some very candid admissions from Mark Zuckerberg himself, talking here about in this regulatory filing that advertising makes up 85% of revenue. Now, it leaves the question, what else can they make their money from should that advertising revenue drop? They don't really have an awful lot else to sell right now. You've got ads for so-called sponsored stories, basically advertising that's targeted at the kind of things that you post on Facebook. Well, Facebook themselves admit this is an experimental and unproven area, i.e. they don't really know where they're going to take that sort of business model. They admit that user growth will slow in future. That's no great surprise. It happens to all these sort of stellar companies as well. Things drop off after a while when the novelty factor wears off. But they also admit that monetizing the Facebook platform will be difficult. What they mean by that is, can they get application manufacturers, the likes of Zynga, to keep making stellar apps, the kind of things that generate the interest, keep the traffic up? Through all of this, you get a sense that Facebook are essentially saying, look, folks, we're happy to have you invest with us, but there's no guarantee we can make you any money, which is quite an unusual prospect when you're asking people to invest in you.
It's a bit strange, isn't it? I gather you also get some kind of wonderful insights into the mind of Mark Zuckerberg.
This is the best thing in this whole filing, Stuart. We had Mark Zuckerberg writing a sort of manifesto, if you like, for the freedom of the internet, right at a time when, of course, the US is grappling with these issues about internet privacy and piracy. And he calls it the hacker's way, a little sort of 10 or 20-point manifesto where he says hacking isn't really illegal. It's actually it's building something quickly or testing the boundaries of what can be done. That's Mark Zuckerberg's definition. He says hacker culture is extremely open, meritocratic, and apparently Facebook even have monthly hackathons. I can only imagine the kind of things they're cracking into there, but you have to wonder what some sort of average Wall Street investor is going to make of all that.
Keeps them fit, I'm sure. All right, Owen, good stuff. We're going to catch up with a few more of the day's business headlines now. American Airlines saying it's going to cut 13,000 jobs as the company restructures after filing for bankruptcy in November. The airline will also seek to ditch its $800 million pension plan and cut employee salaries and benefits. Chief Executive Tim Horton outlined the measures aimed at reducing costs by $2 billion in hopes of steering the company back into profit.
New York Stock Exchange Euronext Group is to return more than $500 million to shareholders as it resets its expansion plans following the blocked merger with Deutsche Börse. The US exchange operator says it will look for other ways to grow its derivatives business. On Wednesday, EU competition authorities vetoed the planned tie with Deutsche, saying the merger would have created a monopoly in derivatives.
And German Chancellor Angela Merkel has told China it should improve copyright protection laws. Merkel raised concerns about Chinese firms violating intellectual property rights of Western technology. During a speech in Beijing, she also said China, which has refused to invest in Europe's bailout fund, could help solve the sovereign debt crisis, but did not make any specific suggestions.
And remember, there's no Facebook in China right now. That might change.
Of course.
But no Facebook in China.
Fantastic stuff. Now, I'm good at maths. 200 pages, you've read 20, you've got another 180.
Bedtime reading, I'm telling you, it's a gripping narrative.
It'll keep him going till he's back on Monday morning. All right, Owen, thanks very much. Owen here with the business news every day here on France 24 and the latest coming up from Claire really shortly. Stay with us.